Coming up in today's video, stocks are higher, gold is also higher, and the dollar is taking a little bit of a tumble. With it, we also see the 10-year yield continuing to push lower, and some moves higher on things like the euro and the British pound. And noticeably, yen pairs are higher today. Euro yen up, pound yen, CAD yen, and the Australian dollar against the Japanese yen, just to name a few. And Fed Governor Waller makes the strongest call yet for rate cuts in July, which is underscoring the Fed's divide. While we know Powell is a little bit more on the hawkish side, as well as several other committee members, we do have some voices in the crowd in the Fed committee that are much more on the dovish side, suggesting we should cut rates sooner because we can. Governor Christopher Waller made his strongest call yet for a rate cut in July, as he again argued that any inflation from tariffs would be temporary, underscoring a divide within the central bank. He said, quote, "I believe we should cut the policy rate at our meeting in 2 weeks," Waller said bluntly in a speech in New York Thursday night. He specifically argued that the Fed's policy rate should be 3%, which is 125 to 150 basis points, or 1.25 to 1.5% less than the current rate of 4.25 and 4.5%. And we can see currently that the Fed Watch tool has a prediction of a 95% chance that the Fed will not be cutting interest rates in the upcoming 30th of July meeting, with just about a 5% chance that a rate cut surprise could occur. To be honest, I think this is actually less likely than even 5%, but I actually kind of tend to agree with Waller in this case. If we look out to September, what we can see is September is sort of the eye on the prize in terms of the first rate cut, with just a 40% chance that we hold interest rates, giving us about a 60% chance that we have cut at least once by the September meeting decision. So why do I think Waller is right, and why do I think that the Fed should cut interest rates sooner rather than later? Although it may not sound like a big difference, every month or 2 months or 3 months that goes by that we don't get rate cuts, it is costing the American taxpayer more money due to the administering of the debt that the national debt kind of owes. The higher the interest rate we have to borrow money at as a country. And with inflation generally cooling off, and we're not seeing huge spikes in inflation despite all the worries around tariffs, with the last 1, 2, 3, 4 previous CPIs coming in lower than expected, with the latest one coming in line with expectations. We're not seeing a huge uptick in inflation relative to what analyst expectations have been. Not to mention the producer price index, which a blue reading means that it came in lower than expected. And you can see we've had a lot of blue readings here recently. Here's a look at the PCE, which is the Fed's preferred measurement of inflation. And you can see that it is mostly neutral to soft inflation data that's been coming in for most of 2025. Meanwhile, interest rates remain elevated. We did come down from the 5.5% peak, but we've stayed flat in an environment where inflation has continued to cool. And my criticism of the Fed and their decision to hold rates for too long is not just me saying it. There's a lot of people who are sort of thinking that the Fed should cut interest rates sooner because we are sufficiently restrictive. And the thought here is that we can cut interest rates a little bit. We don't have to cut interest rates a ton. But Waller is basically saying we should cut interest rates because we can. We've seen inflation really make some good progress, and making a big prediction about tariffs is not really the Fed's job usually, especially when the Fed has kind of clearly outlined that we're not seeing these huge upticks in inflation. But the more hawkish members of the Federal Reserve would argue that we have a really good labor market right now. Things seem to be holding up really strong. There's no need to risk the inflation story from cooling off still by cutting interest rates potentially too soon. That being said, the dollar index is a little bit lower here today. Came back and retested this area of resistance around 99. But I've been mentioning that I do think that the dollar may have some more room in the short term to at least push higher. I don't actually think that the Fed is going to cut interest rates in July. I think very likely they're going to cut in September. And with some strong jobs data recently, I do think that the dollar can stabilize against most other currencies, and in my view is more likely to go sideways than it is to continue its downtrend that it's been in 2025. And take a look at the NASDAQ getting a very bullish reading here on the EdgeFinder, a +10 score, indicating that sentiment, technical, and economic data are generally favoring bullishness in the NASDAQ at this time. But the issue for me with the indices in general is that they are very, very stretched to the upside in my personal view. It does not mean that they can't continue to grind higher, but for me, the risk to reward is simply not attractive enough here to jump into a whole bunch of long positions at these levels. I'd much prefer to wait for the crowd sentiment to go a little bit more negative or more cautious on indices, producing some sort of a pullback, in which case I think the risk to reward to being long indices is more attractive. If you're interested interested in exploring some stocks that I'm watching, I actually just posted a video here today on my Trader Nick stocks channel. But from an index level, I'd be interested in the NASDAQ at least a pullback to the 22,000 level. The Dow Jones is also lining up for a potential breakout to all-time highs, and the S&P 500 pretty much looks just like the NASDAQ. I'd be bullish on a pullback. Another thing that has charged off without me, you guys may know this already, but I did end up getting trailed out of a Russell trade that I had on for several weeks, actually. The trade ended up being a 51-day long trade, and I ended up taking a very nice profit on this move. However, I am going to admit that I'm kicking myself there a little bit because I did get trailed out of my trade right around here before the market continued on without me. However, like I said, with most indices right now, I think a lot of the move has sort of occurred that was going to occur. And I could be wrong about that. We could see this thing continue to drift higher. I am still bullish on these things, but we'll have to wait for a pullback to either get back into something like the Russell or the NAS. But otherwise, I'll just watch it and, wish the best to people who are still riding that trend. It was a crazy good one. I ended up entering right around here, closed out right around here. And it resulted in a move, let's just say approximately, an 8 to 9% move in the Russell, which ended up being a very profitable position for me over the last few weeks. Here's a little follow-up on my oil trade here that I took and shared in our Discord yesterday and also mentioned on the video yesterday. I went long oil as it retested into this area of support yesterday, and we've had some nice follow-through so far. I'm very curious to see in terms of a first stop for oil if we can actually break through back into the 70s. You can see US oil is getting a bullish rating on the EdgeFinder, which gave me extra confirmation to look at the trade more closely. Somebody asked me yesterday, Nick, what did you trade? Did you trade oil futures? So I like trading ETFs. It's a personal preference that I've done for many years. And I actually went long the USO ETF, which has very high correlation to oil futures or oil spot prices. But I still have my stop loss in the same area. My idea here is essentially to look for a break through these highs, at the very least in order to start trimming or trailing my stop loss into profit. Some of the reasons that I really like the oil trade here is number one, I'm getting a bullish reading on the EdgeFinder, which essentially means that economic data right now is suggesting some potential strength on the demand side of oil. Remember that strong economies tend to demand more energy. So with strong retail sales that came in yesterday, inflation cooling suggesting rate cuts could stimulate the economy, and strong labor data that's been recently coming out, I really like the trade on oil. I also don't see this as overbought like I do with some of the indices, and think that there is some really good risk reward from these levels. If I'm wrong, I'll stop out, I'll take a loss, and I'll move on to the next trade. Also, if you haven't heard about our EdgeFinder sale that we're doing right now, it is currently 45% off. It's the biggest discount that we run all year long, and we're running it during this summer sale that will be ending soon. If you're interested in getting a copy of the EdgeFinder for the lowest price of the year, make sure to use the information in the description to take advantage of the discount. There's a promo code there, but also if you send us a direct message using the first link in the description down below, you'll be connected to a real person on my staff who can answer some questions about the tool for you, give you the 45% off discount information, and if you need, can split the payment into 1 to 2 payments for you. So don't miss the sale. All the information can be found down below. For those of you who do have the EdgeFinder, stay tuned for this afternoon. We will be getting the latest commitment of traders data buys and sells to see what institutions did during this week. Here's a look at some retail sentiment on some popular currency pairs. You can see the crowd is pretty bullish on things like the dollar Swiss franc and bearish on things like euro dollar. We take this as contrarian signals on the EdgeFinder, meaning that when the crowd is very short something, we get bullish, and when the crowd is very bullish on something, we get bearish. Now, of course, this is not the only thing we look at. Sometimes people will say, well, why are you taking a trade if you're in the crowd majority? Sometimes the crowd is right. But what we like to do is we like to consider the contrarian signal that it could be producing in combination with the rest of what we look at within the EdgeFinder. One of the things that's really important about the EdgeFinder is it does take into consideration a lot of different variables, but it doesn't overvalue one singular signal, which I think is a common trap that many traders fall into. A lot of traders believe that the commitment of traders data is some sort of holy grail system, or retail sentiment is all they need to make a ton of money from the markets. But in my personal view and experience, you want to stack these indicators together to build a more confirmed trade idea. In the retail trading space, I would say 90+% of traders are missing this level of insights in their trading. And instead, they chase technical charts all day long and wonder why their trading is not working. I do like technical analysis, don't get me wrong, you see me do it all the time in my videos. However, overvaluing one thing is, like I said, a very common trading mistake. Here's a look at gold, which has continued to sort of really go sideways the last few months. This has been a really I talked about this yesterday in my video, just a challenging chart for a lot of traders. Whether you trade gold futures, the ETF GLD, or the CFD variation, XAU USD, right? All of it, right? Gold has just been very sideways. You know what has not been so sideways has been silver. Silver's been doing phenomenal and trending much, much better. These two take turns in terms of who is performing better, who is trending better, but to me, it's really key to actually keep a wide set of different charts that you're familiar with so that you're not forcing trades on something like gold, which is just range bound. Now, again, I do have a long position, but it is a swing trade and it is a small position that I've mentioned many times on my channel is a little bit of just a hedge in my portfolio right now because I'm still very long on stocks. That being said, if we get any sort of geopolitical tension, I'm definitely poised for some upside on that, being long oil and long gold right now. But in terms of gold, if I can get a break through these highs, my plan is to take my stop loss and put it right here. But just not a very interesting chart. I know a lot of people really love talking about gold and they're wondering what's gold going to do next. But to me, there's been so many opportunities in this window of time where so many traders have just stared endlessly at gold going back and forth. I found it really useful, you know, in what I do to be diversified in markets that I trade, simply because, you know, I've caught trades on the Russell and I've traded currencies quite a bit. And, you know, this broad list of things that I watch allows me to not be so tied up with a chart that looks like this. Don't get me wrong, I'm not bashing gold at all. It's one of my favorite things to trade, but there are times to trade it more aggressively, and there are times to sort of do something else with your time and with your trading account, in my personal opinion. If you're interested in getting a copy of the EdgeFinder, we're currently doing a really cool special offer with our partnered broker, 8cap. 8cap is available to traders outside of the United States only, unfortunately for you US traders. I wish we could trade with it too. So currently, if you head over to a1trading.com/8cap, you can actually find out about this deal. Essentially, 8cap will buy the EdgeFinder for you if you make a certain deposit size into a trading account. However, there are specific rules that you have to follow in order to qualify for this, like creating an account specifically using the link on that website page, a1trading.com/8cap. You have to use that specific link and you have to deposit the required amount following the instructions on that page. But if that's something that you're interested in, if you're looking for a new brokerage, you can get the EdgeFinder for free just by essentially depositing into this broker. 8cap is well regulated and offers a very wide range of great products. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.